seems to have found a stimulus where wind is in the sales of precious metals and the equities are reasonably cheap. It would seem to be, absent a real general liquidity squeeze in markets, the perfect storm for gold stocks. The government of Canada has decided that they can freeze the fiscal assets of their ideological opponents without due process, without resort to the court. This is fascism writ large. And this isn't political. I'm not saying it's aimed at the liberals. The idea that the government of Canada believes that they can confiscate the financial assets of their ideological opponents without recourse to due process is absolutely chilling. One of the reasons that I emigrated to Canada in 1970 was the drift to fascism, ironically, that I saw in the United States with the Selective Service and the war in Vietnam. Canadians have always been a little envious of Americans, and it would seem now that the Canadians are way ahead of Americans on the race to the bottom. This idea that it is okay by fiat, without vote and without recourse to the legal system, to confiscate the financial assets of your ideological opponents is pure fascism. It's disgusting, irrespective of how you feel about the Freedom Convoy.
Right. And I spoke to some friends who obviously work at precious metals dealers, and I can't tell you the number of calls that have been coming in because of this news item, and for the exact reason, and people are looking for different assets, or like you said, getting some geographical diversification. So it has been a catalyst, perhaps, for people to think outside the current system that they're in.
The hubris of the political class in Canada and the docile nature by which most Canadian voters seem to have accepted this is mind-boggling for me. And it reinforces to me the necessity to take control of your own financial future and don't trust the commune. Don't trust society. Don't trust the Commonwealth. Use them to the extent that you have to. But don't believe, particularly somebody your age, that a government-sponsored pension or government-guaranteed pension is going to be there. Or at least don't believe that the purchasing power of the so-called obligation that they have is going to maintain your standard of living. Maintain your own standard of living. Do not trust. You know, Daniela, when I was a youngster, admittedly a long time ago, I heard a little ditty that all of your listeners should listen to, and they should forward to their members of parliament and their congressmen and their senators and all that. It goes like this: when your outgo exceeds your income, your upkeep becomes your downfall. Munger would say there's no free lunch, but what he is saying is that as a society, if you spend more than you earn, if you redistribute to those who didn't earn from those who did earn, it has an unhappy ending. Munger would point to Weimar Germany, the outcome of which is Hitler. I would suggest that a strong first step on that road was taken by the Prime Minister in Canada. And I'm not an alarmist. You know, I consider myself to be a hot-eyed moderate, sort of like Munger.
Yeah. Definitely food for thought there, Rick. Just sticking to sectors that Rick Rule likes right now. I know top of mind for you is the uranium sector. You took a lot of heat for it in the past, but you never wavered from uranium. In fact, you'll be hosting a uranium boot camp, and we'll throw up the link in the description for those interested, occurring on March 19th. You almost rounded up all the stars of this sector. Why so bullish on uranium today?
Well, you'll recall 3 years ago, you and I talked at length about uranium.
Yes.
And the fact that despite the fact that it wasn't popular, it was necessary because folks want the lights to go on. Even in a rich country like the United States, 14% of electricity supply is uranium and 20% of baseload supply is uranium. But uranium is and has been for a long time priced below the cost of production, which means fairly simply that either the price goes up or the lights go out. Those are the two alternatives. I know the lights aren't going to go out, or at least I hope the lights aren't going to go out, which means the price has to go up. That's been true for a long time. And the question became when. The difficulty in uranium was an oversupply of uranium post the disaster at Fukushima and post the production surge we saw from the last bull markets. So we had to work our way through that overhang. And one of the ways to do that was to wait until the Japanese nation, the second largest uranium consumer in the world, began to generate nuclear power again. Two things have happened, Daniela. The first was the incredibly successful introduction by my former firm, Sprott, of the Sprott Physical Uranium Trust, which raised 1.2 billion fresh dollars in 4 months, and by itself tightened up the spot market in uranium. But the second, more important catalyst has been the realization among the Japanese electorate that they can't maintain their carbon protocol pledges, and in fact, they can't maintain their economic growth without incurring too much particulate pollution without nuclear power. So the Japanese have restarted, I think, 11 plants, and they have 18 more plants in for permitting, which is the catalyst that moves the uranium market. Meanwhile, the uranium equities market began to get ahead of itself a year ago. You'll recall another discussion we had where I said I love the uranium thesis, but the stocks are too expensive. Well, in the last 7 months, the index, the equity index, has fallen by 50%. At the same time that the timeline for the resumption of the uranium bull market has become much closer. So we have this wonderful circumstance where the catalyst for higher prices is at hand, but the cover charge, if you will, to participate has fallen by half. The consequence of that is that I've graded 8,000 portfolios that are primarily oriented towards uranium, studied the portfolios fairly closely, and I've come to understand the mistakes that most uranium investors and speculators make. And myself and my team have, as you suggested, we're going to host on March 19th, Uranium Investors Boot Camp.
Want to also get your thoughts on what we're seeing with the gold miners right now. As we're speaking, as this interview is being taped, gold is up 15%. Obviously, inflation a trigger for higher gold prices, but gold miners, many of them are saying, gold mining executives per se, are saying they're not benefiting yet from the rally here.
Well, I think all that's true, Daniela. Very seldom in my career has the gold price increased at the same time that the US dollar is increasing versus other currencies, at the same time that nominal interest rates are going up. When you have those three things in common, you are usually setting the stage for a ferocious gold rally. It's said that gold goes up by elevator and down by escalator. When gold goes up, it really, really, really goes up. And in my career, what has tempered the increase in gold prices has been at least nominal interest rates. Interest rates are going up and gold is going up. And faith in the US dollar. Gold and the US dollar are rising simultaneously, which historically has been very bullish for gold. And as you have suggested, the denominator, the gold price, has been going up, but the prices of the gold equities have not been going up as rapidly. The idea that you were making, let's say, $400 an ounce at $1,700, and you'll be making, $550 an ounce at a slightly higher price, means that your earnings will increase more rapidly than the gold price if you manage your business correctly. At the same time that's occurring, many of the gold equities, if you value them the way I value them, which is the net present value of their cash flows at current gold prices from attributable, developable resources and reserves relative to their enterprise value, which is their market cap and their debt combined. These companies are as cheap relative to the gold price as they have ever been in my entire career. Mm-hmm. So we have this interesting circumstance with me where the gold price seems to have found a stimulus, where wind is in the sales of precious metals and the equities are reasonably cheap. It would seem to be, absent a real general liquidity squeeze in markets, the perfect storm for gold.